Good afternoon, everyone. Hey, this is Bruce Marshall with the nightly video update for Wednesday, May the 29th. And this has been a continuation of a crazy market that we've seen really since the first year when all the coronavirus came onto the scene. And today, we've had a lot going on today. Let me show you. Let me take this down here. We had a big gap up overnight. We had a Fed meeting today, and so the Fed at 1 o'clock they left rates unchanged, but then they had the conference call at 1:30 Central Time and said basically what we were expecting. They're going to do everything they can. We've already brought out all the heavy artillery. We're shooting everything we can at this, and we're going to save everything. We're just going to keep printing money until we solve the problem, which we all know that is a giant recipe for a bigger problem later down the road. But that's a whole another discussion, and that's many years down the road probably. But there's again, we've got a lot of things going on here. I'm very baffled, I should say, at with the overall market here, because we have, this was the top to bottom here, 50% retracement. This is normally where you stall out, and we did kind of spend a little time here, and I thought we'd come back down here, and we just keep ripping higher. There's a 618, and we're kind of through that a little bit, and we had some good earnings after the close, or I guess better than maybe expected, from Tesla and Facebook and Microsoft. And they're all up after hours. Everything is, up and up. So I'm looking at this and I'm thinking, I'm very baffled, because this market just won't go down, right? And we're all scratching our head. Everybody's wondering, we're literally back within, I don't know exactly, I think 10% of the all-time high. Like it never happened, like nothing happened. And we read every day that how many people are going to be out of work, and all the, we haven't even gotten all the stimulus money out to people yet, and we're already kind of, as far as the market goes, we're kind of back to normal. Very baffling, and I still think I'm still looking down. This is on the Nasdaq. On all of them, I'm thinking, there's more risk to the downside, obviously, than the upside here. As I think this is all FOMO. It is driven, primarily from the Fed saying that we're going to fix all the problems. It's driven today. Again, last night we had Gilead coming out with, or Fauci saying that Gilead is having some positive results in the coronavirus vaccine. So, the market is like, okay, well, then the problem's solved and we're, back off to the races. And, it's just, we're at a point right now where I think there's a greater chance of us pulling back, obviously. But, again, until we get through the rest of earnings season and until the FOMO kind of dies out here, we should probably still continue to look higher in the short term. We do have Amazon reporting tomorrow after the close, and Apple, and I don't really see a reason why Amazon would have a bad quarter. Apple, on the other hand, that's a different story. They've already said that, so I don't know what to expect. But again, it makes it very difficult, because we don't really want to try to pick a direction here. I do want to fade this as we go higher. Currently, I have one S&P trade on, and it's up around 3,000. So I'm very light on the number of trades I have on right now, and again, I'm just kind of watching. But it's hard to know when to get in and get back in which way that we might go. But I will say this: if you are watching all this, this has been April's been one of the best months I think on record for a couple of the indexes here. I would not try to chase this. I've had people asking me to about buying, jumping in and buying this, and the time to have bought this obviously was down here or down here or down here or down here or down here. It's not here, I don't believe. The S&P, let's see, let me look. Give me a second here. The Dow for April is having its best monthly gain since October of 2002, up about 13% in a month. The S&P is on track to be up about 14%, the best since 1991. The Dow's on the best, on the track for about 16% right now, the best since 2009, and the Russell is the best monthly advance since 2011 with about 19%. So there's some pretty staggering numbers here as far as returns go, in a month. So again, now, in my opinion, now's not the time to be buying. Now's the time to be taking profits and going to cash and wait for the next opportunity, because the risk reward is definitely not in your favor to the upside. The higher we go, the harder it's going to be to go higher. Let's just say that, because what will happen over the next several weeks, we'll have more data coming out. We take it day by day and event by event, from an economic standpoint. But we'll start seeing how it's impacting the economy, even though things are opening up. We'll see how that's impacting the economy, and I think we should be prepared and expect some downside as we start getting some bad news, and or people start at some point people will start taking profit. So again, all that being said, if you were buying any of these levels up here, I'd be taking some chips off the table. Today is April the 29th. There might be some portfolio rebalancing starting 1st of May, and some of that rebalancing might be taking money out of growth stocks going into value stocks, things like that, possibly taking some money out of the tech stocks and that kind of thing. So just be aware of that. So I don't have any setups because I'm not going to do anything right now but wait and watch. Had a really good first part of the year, and in trading this market, and so I'm being even more selective in my trades. And just always remember, you don't have to take every trade, you don't have to trade every day, you don't have to trade every week. Wait and watch for the best setups and take those. So that being said, that's what I've got for today. So I'll wind it up here, and you guys have a great rest of the week, and I'll see you at the next update. Take care.